Good afternoon, everybody. Welcome to the Bullish Bears YouTube channel. I'll give a couple minutes for everybody to kind of find us, and we will be going live with a little bit of a look at SPY to kind of give you an update of what we're seeing in the market. And SPY is kind of like our favorite canary in a coal mine, so to speak. It's just the most heavily traded ETF, so we might as well be the most heavy ETF traders. Give me just a minute here, and I want to make sure we get out to everybody we can. And I'll try to pay attention to the chat as well in this particular stream. I know last time we went live, we weren't able to watch the chat as we should have been. So many questions were unanswered till the end of it. I want to change that this time. I want to make sure that we can respond to people. All right. So essentially, I want to make sure you guys know that if you ever have any questions, feel free to put them in our chat. We will either answer them live or we'll answer them afterwards. And kind of tell us what you like and what you think if you have any suggestions or if you have any questions about stuff you'd like us to present or any questions you would like us to answer, feel free. Put them on in there. All right. So, looking at SPY, just to get started, we've got this nice descending channel that we started way back here when we peaked at 476.44 on the daily chart. And this thing is huge, guys. I mean, this is lots and lots of trend to revert as far as going bearish. But the thing is, we can't say it enough. The market loves taking the stairs up and the window down a little at a time. Being that is, we're in a bear market. We understand that. This nice descending channel trend is pretty obvious. And then we're bouncing around in different levels, different trend lines. But the idea is never trust a rally in a bear market for one, but always be ready to short a rally in a bear market as the other side of it goes. However, there comes a point where you reach into a level where you're kind of at odds and we're kind of getting there today, it looks like. So let me change this particular trend line to a different color and maybe make it bold so it stands out. This is about a 50% retracement of the trend starting back here from about around this time, around 2020 to now. We're in that range, so anything can happen right about now, but we know that the outlook isn't great for everything else, so we'll just trade the action as it comes until we decide that it's going to change directions. One thing to always pay attention to when you're in a descending trend like this, mark out your channel lines, mark out your resistance levels, your support levels. I always put a center line in there. Anytime I have a channel, I put a center line in there. And you can see it's significant. It became resistance here from that last pullback. We knew that that was a 50% retracement. We had about 420 in mind. It almost got there, and then he rejected it right into a crash channel straight to angular support very nicely. Easy play, easy to predict. Now we're at that center point from the top down here today. So there is a point where we're at odds. We're at a key pivot zone. It's about 50% of the previous trend from the bull market that seemed to never end. And we're at a point where we can start considering that it has a good chance of bouncing here and running back to that angular resistance, or if it gets through it, we know we can take the bear side of that trade as well. So let's break this down and zoom in a little bit more as we go here. I'm going to go in and show you the new purple wolf. All right, 2-hour chart. Rocking, same kind of deal. Nice descending trend. We broke out of it a little bit, retraced just about to 50%, came right on back down. Easy trade. We look left, we find the breakover point, we find the trends that was easy to retrace. Idea is we've got a pretty nice bearish setup. This morning we had a nice opening bearish trend that we trade. We scalped the heck out of that in our live stream this morning. It was pretty nice, or at least I did. And it left us at a point where we hit a support level that was kind of clutch. So let's get a little closer look at that. Here's that descending bearish wolf wave, and I set these up on a 15-minute chart. I'll show you how easy it is to find them. When you have a trend after the breakover, it's easier to find. You got peak, dip, run a line. Peak 1, dip 2, stretch it out. It becomes a nice clean trend line. Here we had the reverse. We had a bullish wolf wave, and that was just setting up for a day price target where we knew it would close, or about where we knew it would close. Same difference, only a lot longer term here with the bearish wolf wave. All right, do some looking on wolf waves. There's a lot of literature out there, and it's kind of a neat, easy one-line trend line that just makes a lot of sense to you once you get used to them. All right, so opened up, nice bearish move. We knew where the levels were. We knew where halfway was. Came back up, set up an M top through the middle of the day, broke down to the bearish levels again, and now we're just kind of petering out sideways. So we're looking to close probably around this level. We might get a push in power hour here, which might give us a little bit of a lower reach, maybe back to that low, about 389.50-ish, somewhere in that neighborhood. We could see that again today. Tomorrow is a more concerning day because it's today and tomorrow are both 0 days, so to speak. So we have options expiring 3 times a week regardless. Typically, that would be Mondays, Wednesdays, and Fridays would SPY. This week, because it was a holiday week, we have a Tuesday and Wednesday and Friday expiration. So, with that being said, tomorrow's expiration day will either be A, in a range straight out sideways, or B, we will continue this move and run to that bearish wolf wave, which extends that target down a little bit further. And just stretch it as we go. We could even see like 385 tomorrow. Very possible. Look a little further left again. Get back to that key breakover point. And let's see. Actually, I'm on the wrong chart. Oh, I'm just too zoomed in. So anyways, we've got all this to retrace. Well, we're at that key support level now. And if we go back out to a 2-hour chart, again, we get all this in play. So if we break this key support level, we got this to run all the way down to that key pivot we set up, which was 50% of that previous retracement from about a year ago. Right in that money, right in that area. So if we get going with this trend, we can certainly visit that. And look, this previous price action sets up all the key points to watch for that move to basically just like a mirror image revert to those levels. Get into a 5-minute chart. Lots of easy trades were made. We knew all the breakover points. This nice failed bull flag here was just easy trade on Friday. That made me lose track of emails. I was so enthralled with trading that. That was just glorious. Real easy trades. Today, much the same. Failed bull flag in the pre-market. As soon as that broke over, easy trade to the bear side. We even knew where the pause was going to be. Look, there's your wolf wave. How about that? Love how price reacts to those levels, and especially when you draw a trend line out. You can count on it. You can set your watch to it. And then we broke into a bounce off the lows. Came up, this M top was pretty obvious, broke key support. I went bearish here, made a little scalp there. Nice moves. Pretty much running out, and now we got the formation for the day is a bear flag. So we could easily set this up as a measured move to the bear side, extend into a trend tomorrow. We may not. It is a 0 day. Option sellers love to try and stay in range so that they can expire options as many as possible out of the money. That's how they make their money. So trade with it, trade with the trend, watch out for those levels, know where your pivots are, and essentially be ready to trade what's in front of you. But this is definitely a day trading market. You can swing trade bearish, but at this point, there's not a whole bunch more room until we hit that key level for a bearish long-term trade. So I'm not putting any swing trade alerts out today, really. Just a matter of day trading what's in front of us. We know it'll probably get down to that level, and from there we can see what comes out next. And again, go further out, have a look left. There's all these control areas. They're pretty obvious to see. Well, that's going to about do it for today. Tomorrow I'll try and get some sort of swing trade list together, whether it's bullish or bearish. Maybe it might wait till Wednesday until we can set up and establish whether we're going to bounce off that trend line or not, or that pivot line or not. And from there, we will have a little bit more information to trade with. And we'll start looking at mostly the monsters of tech, like your Microsoft, Disney, Netflix, all those good guys to trade. They provide plenty of price action. That's where my swing trade is going to be focused on, everything that is part of the S&P, ideally. All right, guys, have a good